Welcome, everybody, to the CEO Roundtable on naked shorting. This promises to be an extraordinary conversation, a topic that is really gaining a lot of attention right now in the media, and for very good reason, as you're about to find out. We have a phenomenal panel that's assembled here today to have this conversation, and I'm going to let them each take a couple moments to introduce themselves and their company. We're going to start with Steve Reinharz. So, Steve, go ahead.
Thanks, Patrick, and Roger. Thanks very much for the work you're doing and for having me on the call. I'm Steve Reinharz. I'm founder and CEO of a company called Artificial Intelligence Technology Solutions. We started the company to solve labor and security issues and challenges, and our sales market potential is in the billions of dollars. A couple years ago, our market cap ran up north of $750 million. Now we're sitting around $50 million or so. So when I kind of do some of the math, it's kind of clear that maybe some things were happening on both the run up and the run down. I'm glad to be here because exposing naked shorting to more people and inspiring more CEOs to jump on the bandwagon and talk about it and share it with retail investors allows us to eventually get enough grassroots momentum to make it political and to force the SEC to make some reasonable changes for the protection of the companies and the retail investors that support them. That's why I'm here. That's a quick description.
Thanks so much, Steve. Brian McFadden.
Yeah, thank you for having me today. My name is Brian McFadden. I'm the CEO of TYDE. I'm really honored to be part of this roundtable discussion on market manipulation, naked shorting, and really how CEOs can collaborate together and really come together and build something here, right? And really create shareholder value for our shareholders. So, like I said, I'm the CEO of TYDE. TYDE is a Form 10 spinoff from NASDAQ BBIG. As part of our spinoff, we were able to bring with us some assets. We were able to then go out and raise some capital. We use that capital to make an acquisition, Forever 8. We announced about 2 weeks ago now that Forever 8 is on track to do $60 million in revenue in 2023, and had great excitement from the shareholders, had great excitement from the market, and of course had some market issues there that we're currently dealing with. So very excited to be here today. Very excited to talk with the other CEOs, answer some questions, and let people know what TYDE's doing in order to build value and really combat some of these market issues that we're seeing right now.
Great, thank you. Next up, Hil Davis.
Yeah, hi, thanks for having us on this. It's Hil Davis from Digital Brands Group, ticker DBGI. As everyone said here, it's just been kind of interesting to see how the stock's performed. I do have an equity research background. I was both on the sell side and the buy side, everything from Thomas Weisel to SunTrust to Citadel Investment Group. So I do kind of understand how these things work, and I've never seen anything like this in my life. And it's pretty interesting to see how even for us, we can add an acquisition like Sundry, and it's 8 weeks after dilution, 20 in revs and positive EBITDA, and our stock goes down. And every announcement we make 300% e-commerce growth, and our stock starts the morning off, and an hour later it's just been crushed by something. And it's just very, very odd. And that's why I'm here, because we think there's massive manipulation, and thanks to Roger and what he's done, we're building out a playbook. And I think if we all come together to fight this, we can really have an impact.
Very good, thank you. Next up, we have Salvatore Palella.
Hi, Patrick. Thank you so much for having me. Thank you, Roger, to invite me. I'm CEO of Helbiz Inc. It's a tech micromobility company. We're operating in around 65 cities around the world, from Europe to US, Australia. We are very excited to be here. Our ticket is HLBZ, and I found out about the naked short 1 year ago. I learned and I start to listen a lot of shareholder commenting and asking me about this problem. I get deep inside this, and I'm really shocked about what happened behind the scene, and that's why we start our investigation. And I'm sure we will talk during our call and our roundtable about all the steps that we are taking.
Thank you, Salvatore. And last, we have Roger Hamilton, the catalyst for this whole roundtable. So, Roger, take it away.
Thank you, Patrick, and big thanks to Brian and Hil, Steve, and Salvatore for joining us here. The 4 CEOs that all reached out to me, and there's been dozens of CEOs that have reached out. And I thought, well, it definitely makes sense for us to do this roundtable. So what we share can be shared to other people both investors that can share this with CEOs and CEOs as well. 6 months ago, had no idea that other than the fact that it was illegal, that naked shorting was something that could be happening to our company. But I did see very strange things happening to our share price. Same story as everyone else, where every time we came up news, every time there was any volume on our shares were just getting pummeled. And we saw some pretty systematic things happening where we thought this is not normal. Obviously, that led us to Wes Christian, who was the first person I interviewed, where he just opened this Pandora's box in a 20-year struggle of actually getting to the bottom of this. And when we actually went out and started tracking it, we got the evidence of it. Obviously, we've been, basically, writing and implementing a playbook all at the same time. And this has been a very eventful week this week, as many people know. Being able to be here, share all of this, and give everyone an opportunity also to share their story where they are. I think this is what's going to be really great about having this session, and hopefully the first of many to come with many CEOs. So yeah, back to you, Patrick, and thanks for being our moderator here.
Yeah, happy to be here. Thank you. Roger, can you just give a quick description of what naked shorting is before we jump into some of the core content?
Sure. Well, actually, what I'll do is I'll share the naked shorting we're talking about here, because there's different types of naked shorting. So first of all, shorting itself is totally illegal. Totally legal is where you basically are saying, I have a share that has been loaned to me, and I'm going to basically now sell that share with the intention later to basically then buy back at a lower price. That's when you think a company doesn't deserve to be at the share price it is, right? Naked shorting is when you don't have that share and it's illegal, right? From 2008, it's not meant to happen, but still it's looked at as okay, provided that you actually find that share between now and T+2, which means within 2 days, you better have that share. And there's this whole wording that FINRA gives, which is you need to have a reasonable expectation that you're going to find that share. And as long as you have that reasonable expectation, you can go ahead and do it. And a lot of naked shorting that happens does get covered within 2 days. The naked shorting we're talking about is predatory naked shorting, where they have no intention of covering within 2 days, which means they've fundamentally just created a counterfeit share. And if they do this again and again, like for example, in our case, we saw every 2 months after the IPO, this drop of 50% with volumes of like 3 or 4 times our actual share, like our total shares. It's like, how did someone just sell 4 times as many shares as even exist, drop it by 50%? But then we see over the next 2 months, they started starting to buy them back way after the T+2. That is totally illegal. And if they don't buy back at all, and there's many ways for them to do that, you can end up with massive counterfeit shares on the market.
And the implications, I think, of this as you're describing, Roger, are manyfold, because of course, it destroys shareholder value, and so for people who sincerely invested in a company because they believed in what it's doing, it's predatory and malicious towards them. It also kills innovation. Small companies are trying to do new or great things. When you have these types of bad actors that can come in and destroy the company, purely for profit, it kills innovation, hurts people who are trying to be sincere investors. So, there's a lot of implications here. And I'm sure that the people who are watching right now have been touched by this in some way, shape, or form. I think, the first question is when a company sees that, there's sort of, or seemingly market manipulation and their stock is being played with, how do they know, or how can a CEO know if their company if naked shorting is actually happening? So who wants to maybe take this? Steve, you're nodding, so why don't you talk about that?
Listen, I'll give a first crack at it. I know the other CEOs have their ways of finding it as well, or of suspecting it. And I applaud Roger for moving forward with that company, Roger, that really digs into it. So I'd love to hear more of that story, what you're doing with them as well. But from our perspective, it's if somebody attached to us or in our orbit is watching the L2, and if we see some unusual market makers pop up and start selling, that for us, at least for the guys who tell me this, is a signal that they're naked shorting. So that's basically the signal. And then they give that information to me, and probably like most CEOs out there, which is what we're trying to change. They think, well, what can I do about it, right? What can I do about it? There's just not a lot we can do, which is why I think certainly I'm following Roger on this to see how his efforts go. But like I said in the opening, it's sessions like this to get more CEOs actively involved with the retail investors that's really going to, I think, drive momentum to change this, because I think it is a big lift because of how the system is built, because of who runs the SEC and how they're influenced. But yeah, that's how we know and suspect, at least we suspect, and therefore we think we know.
And Patrick, if I could just jump in here as well, I would definitely caution all CEOs to consider the two more likely reasons that share price is down before like market manipulation, right? The first reason is you have a crappy company, right? Like this is the first reason is that people will look at your company and they're like, sorry, like we don't believe in your company, right? Or you basically are going to run out of money, right? So that's the first reason, right? The second reason is you've just got some toxic financing, or you might have a great company, but you got stuck. And I've seen many people get in that situation as well, which means there's internal issues you need to solve. The third one, which is it actually is market manipulation, can now be proven, right? We're actually going to be running a interview together with the two people doing the best job on this that have been working this for 20 years. One is Share Intel. The other one is BuyInsNet. Both of them have different ways they do it, but they work together. And what we did when we went out to hire Wes was we basically said, we're going to hire Share Intel. First thing he says, they're going to track us for 30 days. I say this for investors as well. If any CEO says that they believe it's naked shorts, get them to prove it. Say, well, then go hide these guys for 30 days. And if after 30 days you don't find anything, tell us that there's other reasons, right? But we should all basically be really responsible on this. Otherwise, it's too easy for a company to say, we're being naked shorted, hoping that everyone's going to believe them without any evidence, right? So there is a very specific way that you can be absolutely sure.
I agree. I agree, Roger, and that's why also we hire Share Intel, because I think before to have a firm decision and before to continue to talk about naked short is really important to have the report. And as you say, wait the 13 days, and then with that report, you can go ahead with the next move. So we truly believe that hire the right person, and you mentioned a couple of the company who does that. We decided to go with Share Intel, and that's the reason why they are working already from a week or so. And it's very interesting to know where they're going to be in the next 20 days. So we're very excited to have the report, and I'm sure it's going to turn that we are right. But let's see the report before to decide and say who have the reason.
Does the report come back on this when you've seen them, that it's definitive, it's probable? How does the report, does it say you are absolutely being naked shorted, or we think you're being naked shorted? How definitive is it when they do the investigation?
Yeah, there's specific ways, and this is the challenging part, because it is something where as soon as you go down this route, it's work product towards a legal case. So that's why we're not able to just say, hey guys, here's the actual evidence. But 100%, right? The actual results of what they're actually delivering actually will be in a court of law strong enough to ensure that you're getting full discovery and that you can then prosecute. And the actual success rate that Wes together with Share Intel have had is extremely, extremely high. They won't actually take a case on unless they know they're going to be able to win it. And this is unfortunate about this. All of the best successes we don't get to hear about unless you're actually one of their clients, because it's all part of a gag clause, which happens afterwards, after these guys have paid out the money, and they really treat it as the fines as basically cost of doing business, right? Once that's done, then you're not really allowed to talk about it. So as an example, someone like Patrick Byrne, I think a lot of people thought he fought a 10-year war and never was successful, but he ended up winning big time against the big hedge funds, including Goldman Sachs, right? So I think that's a really important thing. We ourselves, when we dive in as CEOs, can see that there's an actual pathway, but most CEOs have no idea because this doesn't really come to light. The successful ones ends up getting hidden in the shadows.
Correct. Also because sorry, Patrick. Also because they get inside the DTC of the shares, so they can see exactly what happened there, and that's why what we did in the last couple of days. My CFO is working with Share Intel to get all the right access, and they're going to be, I think it's going to be like 99% accurate or something like this, the report. So it's really important to understand this.
Yeah, and I guess to your point, Roger, too, that this becomes evidence, as you pursue a legal case. I imagine, that the strategy of the bad actors is to try to pummel a company so that it doesn't really have maybe the power or the resources to follow through. Maybe makes them feel safer. Is there a virtue in CEOs like this collectively getting together, having these conversations, and maybe forming a formal or informal coalition to help prevent this? Because it doesn't seem like, and it's another question, why the SEC isn't more aggressive in pursuing these things.
Yeah, absolutely. I think if we go over to Brian, I think Brian's experience both at first of all, BBIG, and then the spinoff, you can see if you just do a one-off thing, right? Like, then you can end up, with all of the naked shorts trying to cover themselves, but then they're just back in the next day as well. You've still got the same problem, right? I'd love to hear from you, Brian, just like your experience of how you're managing this and the kind of main things you'll learn being in two companies where they've experienced this.
Yeah, so first I'll give really my opinion, right? So let me just put a little disclaimer out there. The following statements aren't the view of CrypTide, the board of directors, or any official statement of CrypTide. But as Roger said, I've been around a few deals now and seen some very interesting things, right? From the BBIG days to the TYDE days, one of the things that, we've always looked at is, unusual spikes in price volatility, large increases in trading volume, price walls, right? Essential price walls or price barriers that endless volume doesn't seem to break through, right? Those are all things that become concerning to us as we look at it. We're in the very early stages from a CrypTide standpoint at figuring out what those right next steps are. One of the reasons that I joined Roger's group and joined these like-minded CEOs is to understand what does work, right? Because, all of these things that help to fight naked shorts also cost shareholders money, right? That isn't going into revenue generating activity in the business. And so the more information that I think we can share as CEOs, right, helps other companies in finding targeted ways, to build value and fight manipulation. But like certainly, to Roger's point, over the years between, especially, with some of the interesting price action at BBIG, you saw some trends with, extremely high volume days fought into really hard price walls, and then things going down the other side pretty quickly. At BBIG, you also saw some interesting squeeze days where you saw, really quick gains, really quick appreciation that wasn't sustained or really driven off anything material, right? Do we know if any of this stuff is crossing the line? We at CrypTide have not engaged anybody yet, to give us that, finality or that fact, but certainly, it's some interesting patterns. And I think those patterns are created by more than just, financing and other things. I think there's more, efforts at work here. And to Roger's earlier point about financing, I think that people take advantage of financing and pile shorts on top. And so it's not necessarily independent actions. It's companies and funds and institutions see opportunities to create momentum or grab momentum. And we all know that volume really can come in and slide things in one direction or another. So, we've been diligent in watching our market and evaluating how things have happened. We've been diligent in watching other companies in the marketplace that have similar track records to ours, similar financials, similar financing structures, and understanding what works and what doesn't. Continue to watch for these abnormalities and meet with, the CEO block type minded CEOs and determine what is that right step, right? And while we investigate and research that, we continue to harp every day on build a real business, because that's the way to fight manipulation at the end of the day.
Yeah, Brian, I'll tag on to that. It's all about building a real business. And to Roger's point, it's about making sure you don't have any toxic debt, because toxic debt could crush the stock if you're giving shares away for free. So you never want to do toxic debt ever. You never want to, sell your shares to institutionals for a large discount to market. You want to make that margin as small as possible. You want to protect, communicate retail. And then you're doing everything right. You're building a great business. You're building a great team. You're responsibly managing your shares and your stock to the best of your ability. And you get momentum, you get eyeballs, you get momentum, you get volume, like you said. And then over a period of days, you can just get beat up. And that's a problem, right? Because at AITX, at least, we're very connected to our shareholders. We're very connected to hundreds, if not thousands. And they share the stories. They share the stories when it goes well, and they share the stories when it goes bad. And it affects me. We're not CEOs at the end of some, computer that don't have feelings for our retail shareholders. We do. And that's why we're here. And so, Roger, I'm going to be following your results very closely before I seek to duplicate it. But very exciting what you and Salvatore are doing with that.
Yeah, I think one of the biggest things really that is what the naked short sellers who are creating the counterfeit shares are hoping on is that they can push a company down until it's either bankrupt or delisted, because of course, at that point, they never have to cover themselves, right? They just got tax-free 100% profit off selling something that never existed. And the only way that can happen is when they're selling down, it stays down for long enough that they can cover or basically just fake it. Whereas if you've got buying pressure, which they're obviously picking small caps where basically there is no buying pressure. So that, and people get scared off when they see share price going down 50%, 98%. So that ability for CEOs to be sharing with their investors, here's what's happening, here's what's going on, is the only way to have the investors rebuild confidence, because frankly, investors themselves lose trust as well. And so that communication on what the plan is, what you're doing, which often goes against what the SEC says, because the SEC says, you shouldn't be, overly communicating, right? You should wait your PR to come out, wait for the earnings report. These guys don't wait for the PR, the earnings report to be ripping us off, right? It's happening on a daily basis. And so it's super important for us to do the right thing in the right order as well.
Hil, you had a comment?
Yeah, I think what's interesting, going back to what everyone's been saying, is I do think there's a pattern. I mean, one of the things is I have my trading friends look at stuff, and there's several weeks and months where the basically dark shorting pool was 4 or 5 times our total shares outstanding, which is not possible. And it's that kind of stuff that you can see and start to access. So for CEOs too, and people, just, you can find the numbers for the dark pool. You can also look at your trading volume relative to your share count. I mean, there's no way something like, there's some days we had a $6 million market cap and we traded 75, 100, 200 million in market cap. That doesn't make sense mathematically. And so I think there's some things, talking to Wes, talking to Intel Share, which Roger introduced us to and we're in discussions with, there are things that start to show that there's these trends. And then to Roger's point, the next step is to say, let's go prove it out, which is the big part of where we are. And I think not all the investors understand that you can't just put out releases, to Roger's point, that you do need to follow a path. And especially now, we know that the SEC and NASDAQ or NYSE is looking at this closer because of what's happened with a lot of these shares. So you have to be really thoughtful and not just go out there and just blast out, but make sure you really are taking action steps and announce around those action steps, as opposed to just trying to create a fluff press release. At least that's our approach from the board level and from our company level, based on the advice we're getting and what we're seeing.
Mm-hmm. I also believe there's I'm sorry, Roger, go ahead.
No, just a quick one is that I think probably one thing that's kind of interesting is all 4 of you have had a lot of experience with NASDAQ. And I think a lot of people aren't aware of this, but NASDAQ, just like the NYSE main board, does have this kind of like lower limit, which then puts you under pressure of delisting if your share price goes below that. NYSE American is a little bit more forgiving, which is helpful, right? I don't think they ever tell you this. And we were just lucky that we happened to choose them. And so we've never really been in danger of delisting. But what's interesting is how they're approaching this right now. NYSE obviously is a big organization. They've got different groups, right? So there's one group that is making sure they're double checking all of our press releases right now because they are watching it very closely. But there's another group which has been really helpful at working with us on things like the NFT coupon, which they haven't done with anyone else before, and working together with upstream, getting to understand it, moving at pace with us as well. So I think that's the good news, is that while we're looking at a lot of institutions and thinking that they don't move quickly, there's others that actually are really wanting to respond because they realize that this itself is a challenge as well.
Yeah, also, if I can say something, also NASDAQ, it's really open on this. We had really good conversation, and they just grant us this morning another 6-month period to get to a dollar amount. We are already above 35 million market cap. We are around 55 right now. And of course, this is something that I want to investigate a little bit more on this roundtable. Roger, if you would like to speak us a little bit more about the digital coupon, because I think it's really, really interesting, and it's something that we are looking very closely. And so it will be very interesting for us to understand how you're working on the back end with this and how the market also is helping you. You were mentioned that NYSE is helping you on having conversation directly, because I think it's the first time, right, that is made.
It is. There was one done on NASDAQ just a few days before us by a company called Jupiter, and it was different from the way we did it, but it's brand new. What I would say, and basically what we've been able to share so far, because there's a whole plan, but we basically just shared parts of the plan, is that the problem with obviously getting a share count is the main thing, right? That's when you basically are getting everyone to say, right, show us what you've actually got, right? So if, let's imagine a broker has gone out and they have 1 million shares that they've just sold 10 times over. So you've got 10 million shares out there. They're going to somehow pull those 9 million back, or they're going to be exposed to have said, we've got more shares than we should have right now, right? So they're fundamentally having to go buy back these shares and burn them. Now, the thing is, when that happens, it doesn't stop them from going out and naked shorting the day after, right? So that's why sometimes you see this happen. You've got to have an ongoing plan. In our case, the biggest challenge really was timing. When we spoke to Patrick Byrne's team about what they did with the digital dividend, like it took them several years to put the whole thing together. Even in the case when I spoke with John Berta, right, that took him a good 6 months, and that was him doing basically a merger, not an actual special dividend. So we go, okay, we don't want to wait 6 months because we know these guys are going to wait until the very last minute before they even cover themselves. What are other options so we can just be going for them multiple times? Us doing the spin-off of our entrepreneur resorts, which we announced on Monday, that was something which is going to take more like 3 months, right? And so that's a whole lot faster that we can do that. What we have come up with the coupon can be done within 1 month, because it's not specifically a dividend. It's a coupon where the brokers aren't forced to have to give us the full count, but they are forced on that day to honor anything that shows up on that day, which means that all of these different, any of our shareholders will show up. And if we have shareholders basically saying, yep, we want to have the coupons, and there's more than that broker should have in shares because we can see how many they have, right? Then they're exposed, right? So they are going to have to basically play good, or else be in big trouble off the back of this as well. But it's just another step along the way as well. And of course, there's another part to it, is that by us doing that, it does give us a way to reward all of the shareholders out there too. I've got an interview that's happening. I just did it before this one. We'll release it next week with Mark Elenovitz, who's the founder of Upstream, and his vision for that place as pretty much what we all believe that exchanges should be like. You can't short it. You can't naked short it. Everything's on the blockchain. Everything basically can be verified. It just totally changes the game. This is where things will go in the future, I believe. And I think we're really pioneering this, but hopefully we've got a playbook others can now follow.
Go ahead. Hil.
Yeah, Roger, question to you is because, I think this is a really interesting idea, especially for consumer-facing companies, because it is a customer as well. As you think about the frequency of something like this, because it kind of is a force of a mark-to-market, in essence, is my understanding. Have y'all even discussed that, or is that something to be determined later? But I just think it's something that, going back to what you said, is this is a machine gun approach. We're not just one and done. It's just one of those things that can be taken as a machine gun. It's like maybe twice a year, 3 times a year. So you're constantly forcing them to market and hold them accountable. Any thoughts there?
Yeah, lots of thoughts. We absolutely have talked about it. We are deliberately not saying how often we're going to do this because that's giving notice to the enemy, basically. But the only restriction on this is, does everyone have record, right? And the good news is, the last day of every month, all the brokers are forced to basically have that as effectively a natural record date, where you've got all the NOBOs and OBOs, everybody basically is getting their statement of account. Everyone can prove they had a certain amount on that particular day. So you can technically do it every single month, right? And so we're obviously starting with the first one. It's not going to be our last. And that's exactly the key thing here. This is not about one bullet. It's about a machine gun, and making it so inconvenient for them to keep on doing this that they basically go pick on someone else. Now, that doesn't mean they're not still picking on someone, right? Which means we still want to be looking at, I can tell everyone here right now that whereas my first thing was about finding my own battle for my investors, this is such a rabbit hole that I basically have come across. And for me, justice and the little guy, and this is the reason why I'm in education, knowing that everyone should have a different education system. Well, we should all be educated about what's going on with our financial literacy, including investors on the market, right? Because it's just mad what's going on. So I'm in this for the long term, right? Even after we solve the problem and they're not picking on us as much, I want us to be educating. And I really believe 2 things. Number one, that all companies that are going to get listed should have an education about the fact you're about to jump in the ocean. So let us tell you about the sharks, right? They should all get that. Because I, for sure, if I'd known that, would have already started hiring share intel from day one. And number 2, that you don't have to wait for the SEC or anyone to tell you as a CEO that while you already by law have an obligation to have an internal audit team auditing for any theft or fraud internally that can impact your shareholders, you should already, even though SEC does not mandate it, have also an external audit team, which is protecting you from all theft and fraud from the outside, because that's what we're talking about here. And if we all say we don't have to wait for the SEC to tell us to do that, we'd all set up our illegal trading task forces And we basically will then have that as preventative, as opposed to basically trying to fix something once it appears.
It sounds like, from what you're saying here, that it's almost like setting up a new department, because you guys are trying to drive revenue, profits, growth, expansion, acquisition, all the things that you have to do to continue your company. This becomes a damaging distraction in it's a drain of resources. But does it make sense then, because this seems like it's not a one and done type of thing, that there's an ongoing process here? Does it make sense to start considering, by hardening the target, that you set up an internal team that is dedicated to getting up every morning and working on this particular issue?
I'll just say a quick word on that, and then I can see Steve's got his hand up. We deliberately, as well as having our directors be part of this, is board level, as well as basically, making sure that we had our board member who has, FBI experience. We also have our head of the audit committee that's part of it as well, for exactly this reason, that we want to treat it with the same seriousness that we look at internal audits on the external side as well, right? Steve,
you had a comment?
Yeah, I think that's a great idea. It'd be nice if the auditors enforce that, if we were able to manage that through the auditors, they might be well positioned to manage that. But I want to float an idea by everybody. I'm just springing it on you all right now. I started working on it last year and I didn't carry through with it. But what I was working on with a couple of our securities attorneys was filing an S1. So filing a security that would be an NFT. And the interesting thing about this was the NFT would entitle holders to a percentage of the company's gross revenue over a period of time. This was kind of an idea that we had to share equity, and in this case, gross revenue with holders, in order to try to see if that could, as a registered security, move some equity and benefits to retail and the company outside of the existing largely SEC world. I want to float that by you guys. What do you guys think about that?
I'll share a quick thought, Steve. That really is like a preference share. So from that point of view, it's not dissimilar from what AMC tried to do, right? It's like, okay, we're going to just create a new, class of share, which has different rights to it. The challenge with that, especially, because obviously that is a security as far as SEC goes, and it's still not common to have an actual security linked to an NFT, right? That was obviously, or even on the blockchain, that was obviously something that, Patrick tried to do. Is something which it can be done, but that's what takes more like the 6 months process, right? And again, it's worth investigating. It will happen, but we won't see the first of those happening for at least 6 months from now.
Yeah. We didn't file it. We went forward and did just a basic NFT to start, just to kind of see how the NFT community would react to it. I'll share with you, we didn't get the response that we had hoped. And so we didn't move forward with that next step of filing the full S1. But I do think that just because this swing at the plate didn't work, I do still think that the idea has legs for future companies to fund themselves outside of the existing system.
So how pervasive is this really? Has anybody have any data that shows how many companies are adversely affected by this practice?
No one has that right now. Again, when you speak with someone like Wes, he's been around for a long time, so he's seen a lot of companies actually collapse and disappear off the back of it. He's had companies that have come to him and said, well, maybe we'll take your services on, and the next thing he knows, they've gone bankrupt and they're no longer there. So he's got a lot of anecdotal evidence, but the fact this is difficult to track unless you zoom in, and the way that the data works is even if you do that 1 month of tracking, ShareIntel cannot go back in time because for whatever we believe the reason is, this is not easily accessible data from basically retrospective info that they're tracking on. And so because of that, you have to go down the legal route to then get discovery and go to the actual brokers that you're suing in order to be able to get the data that is going to allow you to kind of show the smoking gun, basically.
Does anybody have any idea why the SEC isn't more aggressive in handling? I mean, that's really the purpose of their existence, isn't it? To protect investors from market manipulation and other such things. Why do they not engage and follow up and really kind of get involved in this?
I want to give the first answer on this. A couple of years ago, I was speaking with an ex-assistant chairman to NASDAQ. I don't remember his exact title, but our stock was falling at the time. And there was a lot of FUD, just a lot of issues going on, as happens from time to time with small and micro caps. And I said to him, I said, listen, why isn't NASDAQ and the SEC doing more to protect small retail investors? And I really thought naively at the time that he would be, well, we've got this and this and this and this program and this program, right? Like some type of response, at least giving some acknowledgement of the problem and, recognition, and maybe there's a plan for it. And his response couldn't have been more different. Instead, he was like, well, I'm summarizing it. Well, as long as we have liquidity in the market, that's how it goes. Like, it was such a stunning response. So that gave me kind of insight to the feeling that the challenges of retail investors are falling on completely deaf ears whatsoever, which is why, again, I support these types of grassroots efforts. So yeah, I don't think there's any visibility or caring from the SEC side to a large extent as to what's happening. And I think that it's because, just like a lot of industries, you're trading places between, your space on NASDAQ to your role at a broker to your role at the SEC, and you're playing revolving shares like so many industries do. It's my opinion.
Anybody else have a thought on that? All right. So then the next, I think, and Steve, you brought
Thanks
this
for
up
leaving
earlier.
me hanging, everybody, by the way. I appreciate that. That was great. That was great. Thank you.
Or maybe you just answered in such a complete way that nobody had anything to add. But and I think that is to a degree the unfortunate circumstance. But Steve, you brought up something earlier that I think is important. I think for people to understand, especially I'm glancing over, I have a screen over here with comments that are coming up. But looking at the spiritual side of this. Here you are, CEOs of a company. You got these, fiduciary responsibilities, which sounds like a fancy way, an obligation, et cetera. But you're also human beings saying, "Hey, I've got responsibility and accountability to people who have invested in an idea, a vision, a business that I'm in charge. I'm the most ultimate responsible party to make sure that this goes out into the world and it produces for them, and that they're." And I don't want to let them down. And now it sounds like you're trying to fight a battle with both hands tied behind your back, because, when you have these massive, big, bad actors that can come in and you're at their mercy and you don't have the regulatory agencies defending you, that's got to be, it's got to be punishing as far as from a spiritual level, saying, how do I get up and face this every day when I really don't have solutions? So, how have you guys been weathering the storm? Because for some of you, it's been years.
Brian, do you want to?
Sure. Yeah. So, look, it's tough, but it's the job, right? We all took this job for our own reasons, but we took this job to create shareholder value, right? As we work through creating shareholder value, there's a lot of facets to that. You've got to build a real company. You've got to build real revenues. You've got to produce positive cash flow. You have to build shareholder value. You have to manage the market. You have to manage compliance. You have to manage the banks. And these are not all things that go in the same direction, right? So, as CEOs, we spend our day managing opposing forces, and we hear retail shareholders. I hear from retail shareholders probably by the minute, right? And we hear them and we want to address them. But as said earlier, there's a plan, a process, and proper timing from a compliance standpoint, right? That prevents us from knee-jerk reacting and telling everybody, here's what we're doing, right? To Roger's point, you also need to strategize through and not tip your cards to your institutional lenders and to these institutions that you think may have a negative impact on you, right? And then you have to balance the cost of all of that. Right? In a perfect world, I'd love to have an internal task force and, a team of attorneys focusing on nothing but market manipulation. But at the end of the day, is that a good use of cash for our shareholders? And if we have to go raise that cash in the market in these market conditions, is that a good use of market and equity for our shareholders? And so we constantly have to balance this. And it's not easy. But if it was easy, everyone would do it and we wouldn't love it so much, right? I love what I do for a living, right? I'm happy to say that on this interview. I want to create incredible shareholder value for the people who believe in our story. There's things that work against us. We understand if we build a process, we build a foundation, and we lay out a timeline that is a realistic timeline for us to achieve, we can achieve those goals. But there's a lot of steps that we can't necessarily broadcast to the world that have to be done. I mean, we've been following Roger and what he's done at GNS. It's incredible, right? But you have to be in a certain foundation to even start his process, right? Because if you don't have the right foundation, you're going to do Roger's process and it's not going to create the results that you're hoping or intending to create in the market. And so you really got to go back from there and say, okay, where is our business today? And how do we get it to where we know it should be? It's extremely frustrating, when you run a business that, your projected revenue is 10 times your market cap, right? And you've traded 10 times your market cap in a single day while seeing a 6% loss. That is not something that any of us enjoy doing, right? And, this gets to one of the comments I always hear, and I'm sorry to go over on my time, but this is a part that, I believe strongly in. But if you look at this and you say, why aren't more CEOs out here? This isn't an easy place to be. I don't know about the rest of the gentlemen on this call, but none of our attorneys wanted us on this call, right? They want us to be extremely careful when we talk about these things. We have financial and institutional partners that, we don't certainly want to ever accuse of doing anything that we can't prove. And so these conversations are difficult and libelous places for us to be. But myself, and I believe the other CEOs on this call, feel strongly that we have real businesses that we can create real value for people to see benefit from. And there's things outside of our control that are currently negatively affecting that as a group, we can work together, form a group of CEOs that fights back, that shares strategies that work, that determines the right ROI on how these things go. Right? What is the dollars you should spend and what are you seeing in the market? What value are you providing to your shareholders by spending those dollars? These are the groups that I think are going to drive this. I know I went off your question a little bit. But,
let's get Hil to share. Thanks, Brian. Hil, do you want to see your hand up?
Yeah, the other thing I'd add too is I think sometimes it might be lost. We also have employees with options and they're looking at those options and they're underwater and they bet on the company and getting job offers elsewhere. So it's both pressures. You've got the shareholder pressure and you've got the employees going, I was banking on this to hopefully buy a house in a year or 2 years. And so it's all of this and you got to manage it. And then going back to what we're talking about is you got to make sure that it's not just going to be a quick pop and you're done. You got to build it the right way. So it's what's almost happened with your stock, Roger, where it's this nice stair-step functionality to it, where it's really sticky and it just doesn't roll back over because what's behind it is so meaty and so real that they can't come in and just slam it back down because that's all they're going to try to do is come in and slam it back down. And so it's all these things that Brian was talking about. And also, I think sometimes it's lost that we have employees that are also hard to come to work because they feel discouraged because they're looking at the stock and they know the results and the work they're putting in, but it's not counting toward anything. It's actually, for some reason, the company's less valuable, even though it's grown 300% year over year.
Can I,
Patrick,
yeah, go ahead, Steve.
Patrick, getting just answering your root question as well, which was, being a CEO is hard because we see all this stuff. Roger's case is an outrageous, egregious situation that is just all off over the top bad, right? In our world, and perhaps in some of the world of the other CEOs that are on this, it's not as blatant, frequent, persistent. It's more infrequent, occasional. It's kind of like, take a little, no one notices, take a lot, everybody notices. So I kind of feel that that's more of the MO. And then you got Roger's situation. So I just want to let you know, it's far from all doom and gloom.
Actually, if I can ask everyone a question, because again, the whole title here is about a playbook. And I think after being at this for a couple of months, kind of formulated like a kind of an 8-step playbook, and everyone might have a slightly different order, but I'd be really curious to hear from everyone where they sit in the order right now in terms of the steps they're taking and whether they might have a different order. But I think everyone's really curious to know. why haven't you done this yet? Will you do this yet, etc. Right? That's one thing. Coming back to your question, though, I want to give everyone a picture of this. This is deliberately meant to be comical and bring a little lighthearted. So hopefully the markets won't take this too seriously. But the way I came into doing our IPO was I really thought it was going to be like, you know, a rocket ship on a launch pad where we can now get resources, we can now get support and take off to all the amazing places that we had promised our early shareholders that we actually had in our vision, right? And then what it actually turned up at, which I was totally not prepared for, was like a dairy factory where you're plugged in, you're the cow plugged in, and they're saying, don't move, don't say a word. We're just gonna milk you here. We're just gonna milk you here, right? And just like, don't even speak to the cow next door, right? And so you're basically in this thing saying, I thought I came here to be a bull, right? A free-range bull, and I'm here basically, we got to escape this factory, right? So what I want to do is kind of like walk through how we thought, how do we escape this, right? Because this was part of our own doing as well, right? Like we had a growth model which was burning money. We're like, no, we can't be doing that, right? So I'm going to go through the 8 steps, and you can share if you think the same 8 steps where you're going. Number 1, hire a company to investigate. Like even without letting anyone know, just hire a company to investigate because you might be wrong, right? Then you got to do different things. Okay, number 2, hire the legal company to take action because you can do that while the company's investigating, right? Or within the first 30 days. If you do not hire the company to investigate and do not hire the legal company, you can't yet say that you're actually taking any action at all, right? And these two can be done fairly quietly or just telling the market, on notice, but then you will have results within 30 days, right? And then you can move forward. Number 3, ensure you have a healthy business, right? Because if you can just make sure that you're actually able to say, we're going to be okay, they will not bankrupt us, or we've got the defenses in place to make sure that they can't unlist us, delist us, right? That would be number 3. Number 4, set up a task force for all the reasons we said before. So obviously we've done all those 4 things. Number 5, report this to the SEC, right? Because and also NYC or NASDAQ, you can't just say it and not report it, right? Because they're going to say, why don't you report this thing? So obviously that's what we've been doing behind the scenes, right? Number 6, communicate with investors, right? We did all this within the first 6 weeks, and then we were out there, and before that we weren't communicating because we didn't think we were allowed to. We said, okay, now we've got something to say and we can factually back it up. And when you communicate with investors, be prepared for the investors then to criticize you about everything, right? Because now basically they've got not just a voice, they've actually got an ear as well, right? But you just got to be prepared for that and be okay with that, right? Number 7, do an NFT coupon, right? Because even though that's new and we've done that, just like I think the task force is fairly new, right? They work, right? The next part is set a merger or spin-off or special dividend, which will then force a full count, but that's going to be more like 3 to 6 months, right? And at least have those in place. Final thing is going to be just focus on the long term, but that can only happen after you put these things in place, right? That's what I would say is the playbook. We're going to develop it, we're going to improve it. But I'd love to hear, like Salvatore, you've already taken some of these steps. Where do you think you are in that order right now?
I mean, I think the order, like the point that you say are really interesting, and I totally agree with all of them. I think you don't have to respect exactly the rules. So accept the first and second step that are mandatory, because we can all talk about naked short, we can all talk about a lot of other problems, but before everything we need to prove. That's the most important part. And I think the second point, so hire the company with it, hire the lawyer. We all have lawyers that are working on this. And I think one of the other point, very important, is count the share. Like the most important part is start to count the share. Because if you know exactly where the share are, I think you can find this. And you can solve the problem. And there is exactly where I think your NFT idea and blockchain dividend or digital dividend, call however you guys want to call, it's very important. And there is where I'm starting right now is exactly there. And I think you have to do with the right people. And because it's the first time that is made, sometimes be the first on doing something is good, but at the same time it's bad because you have to work 2-3 times more than someone who is going to just copy and paste after. But of course, that is the main part, because with a spin-off, an NFT dividend, a digital dividend, you can count the share. You know exactly where the share are. And the DTC cannot play with that because you know exactly where the share are positioned. And that's the reason why I think first, second, and I think you put on the 7th point on your agenda are very important. And then, of course, communicate. Tell every day to shareholder what we are doing, communicate, we are using Twitter every day, and show to the people that you believe in the company, that you are believing in what you are doing. And of course, when you have a full path on all of these, report to the SEC, I think is a mandatory spot, because at that point we need to go there. And then back on the other question, go to the SEC is important, but before go to the SEC, you have to prove that what you're saying is real, because you're talking with official people, and they have to know official answer. They cannot work on just idea. They need to work on official answer. And I think as a Helbiz, we are on a really good path on following the first two points, and now we are working on an idea of how to count the share. And as you say, there is a couple of different ideas, and we are working on one of that.
Got it.
So guys, we've got about 7 minutes left or so, and I'd like to maybe go through a quick lightning round about with each of you about what your best takeaway is from this conversation. How's that sound?
Patrick, is it okay, just because I'm really keen, I know the investors are as well, just where the level is for everyone else? I know with Hil and Steve and Brian, they haven't yet done an announcement through the company on where they're at, that kind of stuff. And I know a lot of people are asking that, and then we can just do the quick sum up. I mean, Hil, you had your hand up?
Yeah, I can, so basically Roger introduced us to Wes and IntelliShare. We are in those conversations. I think I'd kind of put a step A before you get to one, which is got to do all the work for the board, so that then the board's very comfortable with what would follow with 1 and 2. I think people don't understand that takes time, and investors do. And it's really important, because if you don't have those fundamentals there, then you are really going to get in trouble. And so that's our process. And then our view is now, when you look at your 1, 2, and kind of going 1 through 7, all the way through, the coupon can happen really quick once you get that foundation laid. And I think that's also lost. It's like, once that foundation's laid, it's time to go. So what I'll tell you is, right now, we've done the due diligence, we've had the board discussions, and now we're in that point where, okay, let's move forward with the real action items now that we've got the fundamental work done in terms of what we're doing. So we haven't announced anything. In fact, we were going to put out an announcement last week saying the board was looking into it, but our lawyers were like, we just don't feel that's the right thing to do, because this could be considered fluff and manipulation. Wait until you actually do that. We do know that we announce around action items, and we do plan to take action. So I will leave it at that, if that makes sense.
Got it. Steve?
Yeah, I mean, right now, between our stock price and volume, again, I think that if you want to call it theft, the stealing, the illegal activity, I think is really low for us right now. So I don't have any action plans in place, other than, number 1, making sure that I know as much as I can. Number 2, I connect with folks like you, Roger, watch your progress, cheer you on, encourage other CEOs to get involved, and make sure retail knows what's happening as well. So that's where we're at right now. I feel we're still a little under the radar in terms of the attacks and things that have happened to some of our peers.
Sure. And Brian?
Yeah, so for us, we haven't even been public a year yet, right? We've made our main acquisition 4 months ago. So we're on number 3 still, right? We're building that foundational cash flow positive business that will prevent the ability to be driven into a bankruptcy situation. We are aware of the market. To Hil's point, until there's an actionable item, we can't put it out, but we're in conversations with several of the groups that have been named on the call. We're in early conversations about how to leverage their services to benefit our overall enterprise value. But our focus really has been on building the business and regaining control of our financing that we inherited from our Form 10, right? So we've spent a lot of time and filed a lot of things about removing explosion terms from warrants, right? Doing things to bring some finality to how many shares and what that dilution ratio can be. I think that as long as you have any kind of variable derivative, it's very tough to squeeze a short, right? Because their ability to say, we believe we can acquire a share is pretty high. And so we've been focusing on removing that, bringing our business to a standpoint of finality from a cap table standpoint, acquiring new financing that is beneficial to our businesses, to our operating entities. And then once that is complete, right? We put your step 3 as number 1. We hope by that point we have learned enough by being part of conversations like this and groups like this to know what the right action item steps are, right? And is that upstream? Is that share intel? I hope to continue to learn that as we all work together. But we're focused on the foundation, and we're focused on the financing, because without those 2 things, I don't know if your other 6 steps will see the level of success that you have. Right. And that's what we all want to do is emulate what you've put together over at Genius. And certainly, we've got to build the foundation to do that.
Sure. Got it. Patrick.
So we got about 40 seconds each for either a final comment or a key takeaway. And we'll start with Steve.
Sure. Thanks. Guys, I love the action that's happening here. Roger, again, I'll compliment your leadership one last time. And just thanks everybody. I think we're doing some really good things here. Let's keep it up. The one piece, sorry, that I wanted to mention, Roger, I didn't see it on your 8-step list, was political activism. I think that we need to bring pressure to the SEC through Congress as a big play here.
Very true. Absolutely. And I'd say that should be what all CEOs should be doing, whether or not they have a challenge, because it provides a level playing field for all of us.
Agree. Yep.
Great. Thanks, Brian.
Look, this can be done, right? Roger's proving it. I think that conversations like this and being a part of this group is a great thing for all of our companies and all companies market-wide as we look to combat things. Just let retail shareholders know, we're working to gain enterprise value. We're working to build a real business, but we can't always work in the public. Sometimes it is best for us to work behind the scenes and achieve our end results. But, love being a part of this and hope to be a part in the future.
Thank you. Hil.
I mean, my biggest takeaway to continue, there is a game plan. And if you follow it, you do it right, it's sustainable, and it's going to drive a lot of both short, mid, and long-term value to your shareholders. And I just think it's so critical that you just kind of follow this 8-step game plan we're talking about. And that's what we're really excited about, is we know that's there now, which wasn't there until Roger did this. And I think there's a massive hat tip and thank you to Roger, because none of this would have been possible without it. And it is so critical. And so this game plan is the most critical piece, and following it the way it should be done, I think will be huge for all these companies if they have the opportunity to show that there has been this naked shorting.
Thank you, Salvatore.
Salvatore, you're on mute there.
You're on mute.
Sorry, what I wanted to say is I think it's very important for all of us to get in action. So on the Roger list, we all agree that action is the most important part. Talk is very easy, but we need to get in action. We need to follow the plan. We need to follow the right rules. And of course, everything will happen. Of course, sometimes shareholders have to understand that not everything can be disclosure. And maybe when you don't talk about naked short for a couple of days, it's not because you forget about that, but it's because you are working behind the scene. As we mentioned, share intel and all other consulting sometimes take time before to give you answer. We are pushing because, of course, when we realize the problem is there, we want to solve it and we want to make it happen. And of course, all we agree that having a very healthy business behind and try to be profitability or try to push as much we can our company is the most important part to kill this short.
Right on. Roger, the catalyst for all this, you got the final word.
I just say big thanks to all of you for joining. Big thanks to everyone who's listening into this as well. Like, we're all fighting different battles, but we're all fighting the same war, right? So how we come together on this is so critical. Why did I list, even though I'm based in overseas and we've got our company in Singapore, why list in America? Well, there's this whole idea of the American ideal, which is all about a level playing field where any guy, any girl can make it, right? And the fact that we have got what is simply an un-American way of operating within the markets right now, which is not balanced, which is not fair. I think that having you, Patrick, here to actually be sharing and moderating this is in itself an omen for the future, because obviously you're there as a co-founder of Real Films. One of the companies now within Genius Group, we're already talking about documentaries and how we actually put this out educationally to everyone out there. So I think this is just, small beginnings from what is going to be a very big and bright future for everybody. So thanks a lot.
Agreed. Thank you. And for all those who tuned in, thank you for your interest and for being here. And I hope we provide a lot of content and value for you today. So With that, we'll sign off, guys. Thanks very much. Great conversation.
Thank you very much.